Hey guys, it's Adam Rose, Vice President and Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. This is another episode of the Mortgage Guy Podcast, and today we're going to do a mortgage update or industry update, little news what's going on. And I want to talk about people working second jobs, what you can use, what you can't use, income, assets, all that fun stuff. So, little market update with what's going on. Yes, we do expect the Fed to increase rates one more time, possibly before the end of the year. So we're going to have a small impact in the market on the rate side. But what I wanted to talk about is just kind of some statistics and what's happening out there. I thought this was interesting. So a little Redfin survey on homeowners, specifically around Gen Z and millennials. It says 39%, okay, remember that, 39% of homeowners would consider renting part of their primary residence out to anyone, not just family, right? We're talking anyone. So 39%. Now, the cost of everything's going up, all right? Everything's so expensive. You got rates up. You got prices of homes up. Mortgage payments are a little bit higher than what they typically are. So I kind of get it, right? We're trying to figure out ways to offset some of the costs. I mean, what are the benefits here, right? We rent to a complete stranger where you rent a piece of your home, I don't know, a specific room, the garage, I don't know, something along those lines. Helps offset some of that mortgage payment. Maybe you'd be able to charge $400 or $500. But what's the upside, right? A little offset of costs, or someone kills you in your sleep because you don't know who they are. So, risk and reward here. But I thought that was an interesting statistic. But it's 74% of the Gen Zers said they're willing to do it. 66% of the millennials. And this is mainly based on West Coast and Northeast, where what? The cost of living is so darn high. So hallelujah to living in the Midwest. Another little stat, and this is why I want to go into a quick tips on second jobs, is 40% of Gen Zers are working a side hustle or second job in order to save for their down payment. Now, remember guys, saving for down payment is great. Right? It opens up your options of what you can do, what you can afford, where you can buy, types of loan products, and all that. There are other products out there that can help you assist with a lower down payment or no down payment whatsoever. Remember to call me and talk to me about those options, of course. But let's say you do need a down payment. You're going FHA, you're going conventional, whatever it might be, and having a side hustle to save up for money, I love it. I think it's great, but there's some rules to it. Okay, there's a lot of rules actually to it. And so let's talk about the income side. So some people, we get phone calls and they immediately say, hey, I've got two jobs. I'm working this and I'm working this. Well, my first question is, A, what's your primary job, right? Which one have you been at the longest and which one are you working the most hours? So we're going to go off that 40-hour work week, right? So that's going to be your primary. And we'll add in your secondary job. Now, you can't just assume you can use that income to qualify for more house. And the reason is because, especially if you're working more than 40 hours a week, is really why this rule is put in place. We need to see that you've had a 2-year history or a track record of sorts, that you are used to working two different jobs at the same time. Okay, we got to make sure you can sustain it. It's not easy, right? If someone has a full-time job working 40 hours a week all day, and then 4 days a week, as soon as they leave work, their primary job, they're going over and they're working another 6 hours a day at a second job. How sustainable is that? So that's why they like to see that 2-year history of working two jobs at the same time. Now, could you get away with 18 months, two jobs? Well, kind of underwriter discretion there, I think. But 2 years is the mark that we're going to be looking for. Okay. Now, on the contrary, now that's just to count the income towards how much you can qualify for. Okay. Now, two, we see this a lot too. Two part-time jobs. Okay. So let's say we have somebody that works at, Dollar General for 24 hours a week, and they have a 16-hour job, I don't know, at the local hotel or something like that, totaling up 40 hours a week. Now, we like to see this with a 1-year history typically, and it's still underwriter discretion, of course, but when it's not exceeding that 40-hour work week, it's more feasible, right? You're not working any more hours than a normal person would be at their full-time day job. So we would take this into consideration as two jobs, not needing a full 2-year history at the same time. So I just wanted to throw that note out there for people that are doing that right now. If they're working that side hustle thing, they can qualify for more house. That's kind of the background on what we need to see in order to use that income. Now, flip side, assets, right? So let's say we can't use job B in order to qualify for more house, but you're saying, hey, I'm doing this because I'm trying to save up some more money. I want to throw 5% down, 10% down, whatever it is. It can be used, but just like any other asset, we've got to be able to document it, okay? So if you're working a side hustle and it is cash only and you're selling things on eBay, you're doing something, I have to be able to document where these deposits into your bank account are coming from, just like any other transaction that we do when we're trying to document your down payment monies. So just keep that in mind, right? Are you self-employed? Is it a side hustle? Or are you simply working a W-2 wage earner job, 10, 12 hours a week, and you have payroll? If you have payroll, fantastic, so easy, right? That's documentable. But if you're doing a side hustle and getting paid cash under the table and depositing that into the bank, that's going to cause an issue if we can't document where that is coming from. So we're going to need something, right? So if you're working cash under the table, the employer can write a letter, something along those lines. We're going to need to be able to document it. So I just want to give you a heads up on that note. So yeah, that's kind of a new thing, right? It's going to be happening, I think, more and more often than we anticipate, because I'll tell you, most of the times when we get clients in here, almost all the time, they always have a Schedule C. What that is a self-employment profit and loss on your side job. So just make sure you're doing that, guys. Make sure it's either payroll, or if you're saving it in cash, we got to figure out something, a way around that. So I just want to prepare you for that, just in case you think you're going to get all this money and deposit into the bank and we're just going to move on our merry way. Remember, we still got to be able to document the source of where it comes from. So make sure you are doing that, okay? So a couple of quick tips on second job, and I think it's relevant because we're seeing it more and more, and especially with the costs of living, cost of housing, food, gas, you name it, everything's going up. So we got to figure out new ways to stay ahead of the game here and keep our head above water. So if you do have questions about that and what can and cannot be used, remember to give us a holler here at the office at 497-9662. And that is your quick market update and tips for this week on the Mortgage Guy Podcast. Again, guys, remember to subscribe on YouTube. Check us out on Apple Podcasts and Spotify. And we will see you guys next week.